Hello everyone, welcome to the channel. My name is Luke, I am the stock investor, and this is the first video of hopefully many following my financial freedom journey. Now, what you're looking at currently is my Trading212 account. I've had it for roughly a month and I've put in £1,350. At the moment there's the free share deal going on, which is why I made the account. Originally I didn't want to open it up until next year, but I've been doing a lot of overtime and I thought might as well go in now and kind of treat this year, at least this financial year, as a practice for investing. So far I've loved it. The return on the screen isn't actually indicative of how the account is doing so far. I've made a few trades and made £14.34 realised profit, so we're at about a £3 profit currently, but I want to see it in the red. I will eventually go through all of the shares here, how much I've put into each one. If you can't tell from the accent, I'm from the northeast of England. Sadly, when I watch people on here, I love watching. I feel like I've learned a lot. I've been reading a lot about economics and how to invest in the market. But feels like there's a bit of a disconnect between myself as just an average person in the northeast of England and the people I watch investing who have hundreds of thousands. Because you don't really find that up in the northeast of England. We earn a lot less than you do in America because it's so cheap here. So if anyone likes to see or would like to see what I do financially, how much I get, what I spend, I have a financial spreadsheet that I fill in every day, or at least every time I spend money. And at the end of the month, I go through it. I'm happy to show you. I don't mind if it's just going to be a stocks and shares account where I show you what I invest in. I plan on putting in £2,000 by the end of this financial year in England. So I've got a month to do that, which is fine. That should be no problem. And then going on from there, I'm probably going to try and invest 500 to 1,000 a month. It'll be difficult because I have bought a house in the last couple of years and I had to renovate it a lot. So I have a home improvement loan that will be paid off by the end of the year. But if anyone wants to see my finances, I'll show you and you'll see exactly what I spend and how much I save. But let's get straight into it. So what you'll find is most of the shares I actually have are American, which if anyone knows anything about ISAs in the UK, it's tax-free, but if you buy an American share, you pay 15% on the dividends. So you don't pay on any capital gains from selling and buying, but the dividends themselves, you would pay. And I am only going to be buying dividends or dividend shares. So I am factoring that in when I make my calculations. So I'll go through all of the shares that I buy. It's up to you as to whether you think I'm wrong. I would like to learn a lot. I admit, I'll put my hands up, I'm expecting to make a loss this year. I think the whole market is going to go down. And there are a few risky purchases that I'm making. I'm trying to buy things when they're on the low because I do want to make a profit, which you'll see. So we'll just get through it and I'll do my justification at the end. So the first one here, we've got Advanced Auto Parts. I've only put £10 in this. I would like to put more, especially with the price going down. That would be great. I have a trigger for when I want to buy more. So we've got 136. To be honest, in the next payday, I'll probably put a bit more into here because I think it's a good price. Then we've got Barclays, one of the banks in England. I have 75 invested in here. Also down a bit, which is great because I'd rather they were down when I want to invest. And that way we'll get more money in the long run because I intend on holding all of these shares for 5 to 10 years. The money I made in realised profit were originally on shares that I did want to hold, but after recalculating, I think they were either fairly valued or maybe overvalued. Something like Coca-Cola, I put £150 I think into that, but I think I want it to drop maybe 10-15% before I put any more in. Then we've got British American Tobacco. So you can see this is probably, I think, my biggest holding so far, or at least one of the two. I've put in just under £190, sorry, in here. And I'm very happy with this. It's gone up quite a lot, you can see, since I've put it in. I do expect it to fluctuate more. I think it'll drop down. I expect all the shares to drop. I'm expecting this to get to 2.7. And at the moment, as you can see, my average price is around 3. So when it does drop again, I'm going to be putting a lot more money in. This is a really good dividend payer in the UK. So this would be good. I do want to do dividend investment because I want to see the account as kind of like a passive income. I am treating it more like a hobby. I want to learn whilst I'm doing it. I enjoy looking into financials. So this has kind of been quite fun so far. Then we have Hewlett-Packard. Oh, I've only put 25 in this one so far, also gone down, which I'm very happy with because that means I can buy it and lower my average cost. Then we've got Imperial Brands, another one like British American Tobacco. This one I put in £50. It's up slightly, which is great, but I do want it to drop so I can put more money in. Some people might see it as risky having two essentially tobacco products, but I do eventually want to have quite a large diversified portfolio, and I'm putting it into every area I can. This is probably the one that people are going to raise their eyebrows about. I've put in roughly 230 into Intel. At the price it's at now, I still think in the long term this is a really good investment because they've put a lot of money into the market, into their own investments, so that they in the future will be able to profit. But I do see this dropping another easy 20, if not more percent. I'd expect it to hit the low 20s, if not high 10s. I can see it going to as low as 17, 18. And as long as it keeps going lower, I'm going to keep buying because I think for the next 2 years, even Intel itself has said they can't see themselves making much profit. But in the future, once the American factories that they've built start producing, I can see them doing a lot. Intel's probably the most questionable. That is the one where it could hit or miss, and I've accepted that. I know it's going to go down further. I'm factoring that in. I don't care if this account says negative for the first year or two. It's the long term I'm looking at. Now we've also got Johnson & Johnson. Now I believe Johnson & Johnson right now are really well priced. It could drop a bit further, but I would like to keep investing in here. I've put in roughly £127.50 into this one, and it's gone down again. I'm happy with it going down because then I can decrease my average. I'll be putting probably about £100 into this, I think, on my next payday. And then we have Legal & General. We're back to British. Any dividend investor in the UK will know Legal & General. I think at the moment the price is probably fair value. I want it to drop maybe 10%. I'm going to keep investing even if it drops a tiny amount. I'm kind of happy with that price. I do think in the long run it'll probably stabilize around 225, and that's when I want to put more money in. But I'm happy with that. I see it going up. And for Legal & General, I can't actually remember how much I put in. I think £35. Then we're on to Lloyds, another big bank in the UK. I'm really happy with Lloyds. They're who I bank with. Out of all the banks in the UK, they are the one that I want to put my money into. But as you can see recently, their stock has been up and down. The market is always volatile. It's a guarantee. But for Lloyds, I imagine them going up from here. But I hope they do drop so I can invest more money into them. Another pretty good dividend yield. And for them, I've put £125. Then we're back to America and Lowe's. We all know Lowe's. The price, I'm not sure how I feel about the price. I'd like it to go down about 10%. As you can see from my price alert, I want to buy more, $195 roughly. I'm happy with that. I see Lowe's as one of those companies that are going to be here for a long time. Invest now whilst you can. And for them, I've put £25 in, but if the price goes down, I'll keep investing. Now, this is another one of the volatile stocks that we've been talking about. So medical properties, it's a real estate investment, and the dividend yield is crazy. I imagine they have to cut it. I know that recently they've lost one of their biggest clients, and they're, well, not lost, but their clients aren't able to pay for a while. With it being real estate, it's going to drop. Now, I don't see them going out of business. They have a good wide moat, and they invest, I believe, in things like hospital architecture. So I can't see it going out of business, and I want to invest more money in here. I think we could be at the bottom, if not close to the bottom. So where we are now, I'm happy to put another £100 in on payday, try and get that average down below 11, and I'd be happy with that. And with that dividend yield, which is crazy to me, I'll be happy to hold that for as long as I can, keep investing whilst the price is down. For that, I've put £105 in. As you can see, it's down a bit, but we'll take it. Next, we have Pfizer. I put 75 into them. Another one of those really large companies that I don't see going out of business anytime soon, and I see them investing into the future. Nice dividend yield. The £75, we're losing a bit, but I'm happy with this price. I'll invest more into that for sure. Then we are on to Procter & Gamble. You're probably seeing a trend here. I'm investing largely into American shares because I think the UK share market right now, especially for dividend payers, seems really overpriced, and I'm waiting for it to crash. I do see it happening, but at the moment, it's not a buying zone. But Procter & Gamble, I've put in £55 and 1 pence, if you want to be exact. That is up. I'd like it to drop, of course, so I can put more money in without increasing my average. I think this is probably fairly priced, if anything. I can see it going down a bit again, but I'm expecting everything to drop this year. Now, Stanley Black & Decker, this is another one where people might be questioning it. I think right now the price is good. In the long term, I see it going up again. As you can see, we're near the lows. It was definitely overpriced when it was in the 200s, no doubt. But I don't think right now that it is correctly priced. I have it as minimum 100. So I've put £174 into this account, into Stanley Black & Decker. Now, they're quite nice dividend yield. They're all dividend payers, so you'll see that trend. I'm definitely going to be putting more into here. If I can get that average cost to 85, even 85.5, I'd be very happy. Then we're onto another REIT, this time Tritax. I haven't really put much into this one. I think I've put £17. It's up a tiny amount. Another good dividend yield. This one, once again, I like the price that we're currently at. Every time it drops into my pricing market, I will buy. I'll keep putting in. Although, as you can see from this, it has fluctuated quite a lot. This I see is an investment that I want to keep putting money into. It's another one of those British ones where it's hard to get at the right time. Then before we get into the ETFs, I'm going to show you my Vodafone. Vodafone is a questionable one. I've only kind of put money in because I want to see and monitor how it does. I only just missed getting it in the low 90s, which I wish I'd bought into because it shot right up to 10, back to 100. I'm going to put more money into it when it gets into the low 90s again. But I'm kind of just watching this one as a lesson to myself. I think Vodafone will stabilise and then grow again. You can see how much it has decreased over time. It's got a nice dividend yield. I imagine them cutting it like Intel did, but we'll have to see. And then eventually I'm going to have an ETF portfolio where I'm putting £25 in a month, I think, in each one. So we've got the FTSE 100, 25. It is down. This is great for me because then next month I'll put £25 in, the average cost will get lower. Now this one I believe is the FTSE All Markets, also £25. Then we have the FTSE Emerging Markets, £25 in as well. And then we've got the S&P 500. Now what I'm hoping to do is slowly build up the ETF. I'm kind of using the ETFs as a monitor to see how the overall market is doing. And then based on that, I'm going to look into it. If it goes down a lot, like here we see, down 42 pence, which is 1.26% from when I bought it. There has been a lot of volatility in the market this week, which has been great because I feel like I've been able to learn quite a lot and watch how the markets react. What I want to be doing is fighting the urge to buy when the prices are going up. I want to do the opposite. I'm trying to buy when I think the price is good and it's still falling. So when I see something like, here we are, Pfizer is down, I think that is a good price. I'm happy to invest more. The other ones, British American Tobacco, I'm kind of annoyed that that shot back up. I want that to go back down because that is a good dividend yield and I truly believe it's going to do well. Intel is a one where I'm kind of investing for 10 years plus. I don't need the money that I'm putting into this account. Make sure you only invest what you need to invest. As you'll see, if you do want to see my financial spreadsheet, I pay my bills first, I pay my savers first, and then I put money into the account for investing after I've factored in if there's going to be any surplus for on the car or on groceries, everything like that. So let me know what you think. I'm here to learn. I know fine well that I'm not going to make great decisions on every purchase. I'm expecting to make a loss on quite a few, especially the volatile stocks like Intel, Stanley Black & Decker, even Tritax. There are going to be stocks that I do not make money on, and I've factored that in. I'm going to try and get this to 2,000 by the end of this month. Hopefully I can. We'll see how it goes. And then just give me your opinion on how you feel between Trading212 and Vanguard. I might move over to Vanguard because I believe once you've put 2,000 in Trading212 that you start paying a fee. If that is true, I'll have to reconsider and I'll figure out which is the cheapest to run. But quite frankly, I've been enjoying this so much that I'm going to continue doing it. I'm a year ahead of schedule, which is great. I'm working a lot, and I'm kind of seeing this as kind of an investment into my future, even though I'm treating it like a hobby, because I've been looking into all the finances. I enjoy doing maths, so I've been trying to do the calculations myself and then take into account what the forecasters are saying as well. I also know the future is wild. We never know what's going to happen. And I'm kind of using this as an example of invest whilst you think it's a smart investment to make, but don't just invest because everyone on the internet's telling you to. I see people going wild about Microsoft, Apple, Coke, McDonald's, all the big ones, but right now I don't think the price is great for any of them, so I'm staying away. But I'm here to take guidance, so please write a comment below if you want to see the journey of this account. I look forward to seeing how it's going to perform in the future. Hopefully we'll see it going on the up. You can see how quickly it has gone up so far. I definitely didn't intend on putting this much in this quick, but I've been enjoying the investment so much and I want to keep doing it. I want to get into the routine, make it habitual, and hopefully from learning from everyone on here, I will become a good investor, a smart investor, and someone that you're going to see for years to come. So once again, I've been the Stoke Investor. If you want to follow my Instagram account, then it is from the same name, the Stoke Investor. I'll put it in the bio. And if you want to get the free shares, my link will be in the bio as well. And I'll put onto the account right now the code if you've already got an account. You can only get the free shares if you haven't put money into the account. It says total value £15 for that one share. I also got a Heineken share from when I made the account for about £50. So it's definitely worth it if you're going to make the account anyway. But take care everyone, have a nice day, and look forward to the next video.